Well, as promised, time for us, our special segment, D Street Chatter. Nimesh joins us to tell us what he's picking up in terms of dealing room chatter. Nimesh, over to you.
Hi Nigel, so we've seen a bit of a bounce back, but still in a range-bound trade. And again, a day when there is a lack of participation from larger institutions. So that trend of lower participation from FIs continues. In terms of interest, there is a bit of interest back in the technology names, especially the large.
Okay, I think we're having some issues, technical issues with that line. We'll just have Nimesh back up. Okay, I think Nimesh is back. Nimesh, back to you.
Okay, so as I said, there is a bit of buying back in the technology names, especially the large cap technology stocks. So HCL Tech numbers will be something to watch out for, and if there is a bid which the street is expecting for, you can probably see a bit of a interest back in the technology names. So that's something to watch out for. Also, while the bank has been underperforming, the Nifty Bank has been is down. There is a bit of contra buying into the HDFC twin stocks today. So both HDFC Bank and HDFC Limited has seen some bit of buying back from the FI desk. Remember, the HDFC Bank results will be announced on Saturday. So even financials will be in focus on Monday. So both IT and financials is something to watch out for, and there is a bit of pre-positioning in both the sectors there from the larger institutions. Another day of mid-cap outperformance, but again, it's been very, very selective now. So while the breadth is positive, it's turned quite selective in the mid-cap as well. So lack of institutional support, but there is a bit of contra buying in some select technology and financial stocks.
Okay, Nimesh, in terms of stocks, what are you picking up?
Well, so the first stock on my radar is RBL Bank. That after a big underperformance has seen a bit of up move in the last couple of days. I was just chatting with a couple of dealers as to what could be the reason for it. And one of the explanation is maybe one of the leading insurance company has been an active buyer in this particular stock in the last couple of days. And hence you're seeing a bit of delivery market as well. So that's RBL Bank, backed by some insurance companies buying that particular stock. So that's the first one. The second stock is Paytm. We've seen the kind of bashing the stock has seen in the last many days now. Today is the first day of some contra buying in that particular stock. The stock is up 8% the last when I checked. And I understand one of the leading AIF was an active buyer today. So maybe the delivery data will be keen to watch in Paytm. And the last stock is Sequence Scientific. Again, it's been in a range for a while now. Last 2 quarters have been quite weak for Sequence Scientific. But I understand there's going to be a corporate development soon. There could be a change of guard at the top of Sequence Scientific, and hence you're seeing some bit of activity back in that stock as well.
Okay, Nimesh, thanks a lot for that update. By the way, just don't lose sight of some of the big stocks. Kotak is making a bit of a move, and HDFC Bank as well, ahead of numbers, is making a move. So that's pulled the Bank Nifty almost in the green. And in the last few minutes, there's a big move happening in TCS. Now, TCS has moved to high point of the day, 39.70 on the January futures for TCS is what we have. Mitesh Thakkar is back with us for BTST calls. Mitesh, tell us any call on the index and your stock calls?
See, on the index, we have again come back to 18,250, 257. I would now just only suggest that the stop loss be trailed to about 18,150 levels. So we were at about 18,080 yesterday, now 70 points higher. I think this market will lose strength and there will be choppiness because the overbought readings haven't gone away with the morning gap down, and I think they're back on the charts with markets getting closer to yesterday's high or just around yesterday's high. But stock specific trading can be more on the long side because that's where the stocks are breaking out. So I have a buy or a BTST on Ambuja. That's a stock which can be bought with a stop at about 399 and a target of 410 for tomorrow can be looked at. And the other one is a BTST on DLF. Here I recommend buying with a stop at 414 for targets of 424.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's tell you about a couple of numbers we're expecting in the next couple of days. Tomorrow we have HDFC Bank. So Abhishek joins us to run us through the expectations out there, and then I'll tell you all about the expectations on Ultratech Cement. Abhishek, you go first.
So, Nigel, HDFC Bank is going to report earnings tomorrow. The street is anticipating the highest profit in last 4 quarters. So, we already have the business update wherein the loan growth is the best in last 6 quarters in terms of YOY growth and 7th quarter high in terms of quarter-on-quarter growth. So, advances are up 16.5% YOY and about 5.1% sequentially. The credit to deposit ratio is at 87.1% when compared to 85.24%. This is an important figure in in terms of the net interest margin movement. Low cost deposit ratio is at 19-quarter high in terms of, it's at 47% when compared to 46.8% in the previous quarter. So net interest margin may remain stable or improve sequentially. It was at 4.1% in the previous quarter. Now CLSA has an estimate of slippages of formation of bad loans at 4,000 crore when compared to 5,400 crores in the previous quarter. Provisions expected to decline on a sequential basis given the fact that recoveries and upgrades will be strong in this quarter. The asset quality or gross NPA ratio can improve by 10 basis points sequentially as per the estimate of ICICI Securities. You need to watch out for the restructured book movement. It was at about 17,400 crores or 1.45% of the loans in the previous quarter. So our poll suggests NII growth of 13.5% YOY and about 4.7% sequentially. This will be the highest NII growth on a YOY basis in last 4 quarters, while we are working with a PAT growth of 16.2% YOY and about 15.2% sequentially. Back to you.
Abhishek, thanks very much for that. We have Deepan Mehta who's now joining us to run us through what he's making of things. He's of course with Elixir Equities. Deepan, thanks very much. HDFC Bank, the big one, tomorrow, earnings. You heard it from Abhishek in terms of preview. Your thoughts on what the stock might do though?
Well, being shareholders of HDFC Bank, we are always quite bullish and hope that the company reports an excellent set of numbers. I think whatever data points they shared with us last week or so on completion of the December quarter was very encouraging. I think best-in-class growth in terms of deposits as well as credit growth. And maybe a lot of the costs also be reduced because of lower NPA provisions. And I think HDFC Bank has underperformed for the past 2-3 years as compared to the Nifty. And I think that kind of underperformance is just not sustainable. And you may see that returns revert back to mean levels. So we're very positive on HDFC Bank over the next few quarters or so. And it consistently gains market share at the expense of peer group private sector banks and PSU banks. And some of the technology related issues are now behind it in terms of credit card related problems. So looking forward to good numbers coming from HDFC Bank and significant outperformance over the next 3-4 quarters also.
Okay, HDFC Bank expects significant outperformance. The other one that will be declaring numbers, and this time on Monday, is Ultratech Cement. Now, normally it's a stock which makes big moves on earnings. Nigel, what can we expect?
Well, this time around, Anuj, expecting a bit of a dampener in terms of their numbers. The stock made a fresh all-time high in November 2021, but November was a weak month for all cement companies. So that's why, in fact, the numbers will be looking a little bit weakish. Now, on the top line, we're working with the growth of close to around 3% odd. The operating profit, though, should come down by around 20%. And margins should see a compression on a year-on-year basis from around 25%. Remember, the previous quarter was around 22%. It's likely to come down to around that 20% odd. Now, we are saying that, in fact, on the top line, there'll be a bit of a growth, though volumes are expected to see a decline of close to around 4 to around 6%, if you're looking at it on a year-on-year basis. On a sequential basis, though, there'll be some growth on volumes because they've commissioned one of their facilities. 1.2 million tons was commissioned in October. So on a sequential basis, it looked good on a weaker monsoon quarter. Dip on terms of volumes on the top line, but why is there a growth in revenues? Because realizations will be higher to the tune of around 8 to around 9% on a year-on-year basis. Now, the key factors for a weaker volumes, one is that demand was subdued. You had poor availability of labor, construction bans in various parts of the country, and also sand availability was a bit of a problem. Margins will see a compression. That's because, the realizations on a sequential basis will see a bit of a downtick. Input costs, whether it's coal, whether it's pet coke prices, they've really spiked up. So there'll be increase in power cost. Also, some deferred marketing expenditures could come to the fore, which will further dent margins. Key thing to look out will be management's commentary from year on. Q3, everyone knows this week. Q4, are things looking up? What's it looking like in terms of demand as well as pricing? Most crucial. Deepan, how would you approach the stock? It's 7% from its recent peak. Not cheap, but it's the big daddy. And it's the one that's going to be adding capacity for the next 18 months or so.
Nigel, I think all cement companies are adding capacity at a feverish pace, and that's a bit concerning that 2-3 years down the line, there could be a glut situation. Of course, demand remains strong just now because of pent-up projects now getting commissioned and real estate also doing well. But by and large, I think cement seems to be well priced at this point. And to an extent, I think the levels at which Shree Cement and Ultratech are trading at the price to earnings multiple seem to be a bit unsustainable. So I'd be a bit cautious in cement. I think it's better to buy the cement consuming companies, say the infrastructure, EPC players, or even the real estate companies. I think there's considerable scope for appreciation over there rather than cement, where I think they're not able to pass on the cost increases the way they had been doing earlier. And some amount of further compression of operating profit margins cannot be ruled out. So I'd be a wee bit cautious on cement stocks and Ultratech in particular.
Okay, well, so many stocks doing well. Copy Day Enterprises, by the way, really has to be the stock of this month. And ever since that story about the revival, 53% move in the stock this month, frozen on 20% upper circuit. Deepan, good afternoon. Deserves a relook this one, Copy Day, or would you give it a pass?
Yeah, good afternoon. See, it all depends on whether there's a corporate action over here. It's a great franchise, very good distribution, strong brand, but unfortunately has never been able to generate the kind of profits which a quick service restaurant, if you were to classify it as one, have been generating. And it's ripe for an acquisition. I think Cafe Coffee Day in stronger hands can make a huge difference. But I've stopped tracking the company per se since all the controversies it got into earlier. So I wouldn't have a comment at this point of time, except that you would relook at the stock if there's some corporate action.
Okay, all right. Deepan, stay with us for the time being. We need to take our final break before we get into the weekend. So let's take that break. But as we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a very special campaign, Informed Investor, and that empowers you to make the right decisions with your money. Investors need to check the